Hello, everybody. I'm here in the live webinar about logistics and supply chain startups markets 2020. With me, I have two experts. I'm Martijn Lofvers. I'm Chief Trendwatcher of Supply Chain Media, and you might know me as the Editor-in-Chief of the European Quarterly Supply Chain Movement, also the website and the bi-weekly newsletter. And with me, I have two experts from McKinsey. First, Ludwig Hausmann. He's partner at McKinsey and Company. Hi, Ludwig.
Hi, Martin. Good to be here.
Yeah, and next to him we have Tobias Wölfel, also from McKinsey and Company. He's a specialist for transport and logistic industries. Hi, Tobias.
Hello, Martijn. Hello, everyone. Thanks for your time.
So, hello, everybody. All the listeners are in mute, and we will have a Q&A at the end. But you can also ask your questions right away. So you can type your questions in the questions panel on your right-hand side. And if the questions are in line with the conversation we are having right now, I will start asking these questions right away. So we keep this whole session interactive. This session will be recorded. And we are recording right now, so you can listen it later on or forward it to your colleagues. And also, the slides will be made available as a PDF 48 hours after this session. All right. So getting back to the agenda of this session. So we have three topics, I would say, to discuss with Tobias and Ludwig. Oh, wait up. I have to share my screen better. Yes. So we have, again, with me, Tobias and Ludwig. And we have a short agenda, and we start with the global perspective on startups and logistics and supply chain across the world. And then we'll zoom into Europe, and then we end up with the implications for shippers and 3PL startups and investors. All right. So Ludwig, why the focus on logistics and innovation?
Well, I mean, the industry is one where our research has shown that innovation was always necessary and important to drive down the logistics costs. So index the logistics costs across all modes have always only known one direction, and that is down. So the efficiency gains that our industry has created made it possible to actually allow every other industry to globalize and to be more cost efficient. And our kind of when we looked at this last year, we saw also an increasing interest in logistics startups, both from investors but also incumbents, and that's why we thought, hey, we need to really look at this space more closely.
So you did a survey in this area. So here are your bases. So what did you do?
Yeah, so of course we surveyed people, but we also analyzed funding. So there are a lot of sources where you can actually find out how investors, venture capitalists, but also strategic investors invest money into new companies. And what we did here was actually look at almost all funding that you can find in the sector. We analyzed 30 billion of venture funding over the last 10 years, which is almost everything that went into logistics, and almost 200 startups, and looked at it through many lenses over time, by industry, region, and also checked the COVID impact on these startups.
Okay. So, and what is the trend in this area?
Well, it's clear that first of all, the investment went up quite significantly, and that's interesting because it's also outgrowing. So until 2014 and 15, logistics was actually, basically not at all the poster child of investors. No one looked at it. But then, and by that time, venture capital had poured billions and billions into other sectors. But in 2014 and 15, it changed. So you see it here on the slide, the number of funding rounds, but also the funding in total increased quite a lot up to 2018, where we saw really a spike. In 2019, still significant. And this year we have to see, but the one trend that's kind of pertaining is that even this year, the drop in venture funding in logistics is less than in other sectors. So it seems that continuously kind of logistics is a bit on a higher level of interest for venture funding than other sectors.
So I was wondering, why didn't VCs look at logistics? Couldn't they understand, or were they just watching at the fintech area? Have you?
Yeah. Yes. So we asked ourselves the same question, and it's a great question. I think venture funding first went into areas that are more B2C, so high frequency transactions with consumers, and the pain points in logistics were also quite large and not easy to fix with a single platform. And a lot of the logistics happens cross-border that made it even more complicated. And therefore, everything went into e-commerce or software and other sectors first. But then people realized there's actually quite a lot of inefficiency, and transport and logistics sectors are 10% of the global GDP. Therefore, there needs to be opportunity. And then once the first startups really scaled, everyone became or got a higher appetite.
I've got a question from the audience. Is there a correlation with the oil price developments in the past years and, well, the focus on logistics and the investments in that area?
It's an interesting question. To be honest, we haven't seen such a correlation. Okay. Obviously, you can imagine that the higher the oil price, the more efficiency gains are required from logistics companies, and startups help. But the drop in the last 18-24 months, I wouldn't attribute it to the oil price decline, but rather the general market environment.
All right. So you not only look at the whole market, but made a differentiation into different business models within logistics area.
Yeah, and that's maybe kind of the core slide of our analysis, because what we found is a lot of funding reports out there that just kind of looked at it in aggregate. Hey, that's logistics startups, but we all know that logistics consists of so many different business models, so many different types of services, transport and logistical services, that it's really key to understand which areas seem to have the highest potential for venture investors and also startups, and which less of. And now this page looks at it first kind of in absolute numbers. And what's clear there, and linking back to my previous comment around where venture funding went first, B2C business models that are relevant for consumers and really become a brand out there for consumers seem to be attracting most attention. So that we have here the new last mile delivery model, and it's on top of our funding list with 10.5 billion. But it's important that within those, we didn't even include food delivery platforms. The Delivery Hero or Uber Eats and Grubhub, they are not in there. Otherwise, it would be even much higher. But we do have new kind of crowdsourced courier type models to deliver other stuff. So same day delivery of a normal e-commerce or other kind of Instacart, for instance, that has a picking of groceries, including delivery model. So these seem to draw a lot of attention and definitely get most funding. But also then in the more B2B space, road freight marketplaces and digital brokers are commanding the second highest total funding. And then we have a lot of startups in the space of warehousing, which is often warehouse automation and robotics. And then the fourth category is also interesting because these new entrants in the parcel business have not reinvented anything in terms of parcel business. They have just filled a gap of high quality parcel delivery, for instance, in India and other emerging markets that also command a lot of investment. And then you have smaller, more niche startup spaces. But this kind of, so to say, this breakdown tries also to attribute to different logistics business models where all our incumbent logistics companies are active. So they see where are startups also probably competing with us.
Yeah. So which is the largest segment of the whole startup area?
Well, yeah, and this is kind of on this page we took on the right column is again the funding that you have seen on the previous page already. But then we said, hey, it might be useful to contrast that with how big the different logistics subsegment actually are in the global market. And what's also interesting is that the Courier Express parcel market is globally, in terms of market size, only a fraction of the freight transport market, so road freight, rail freight, air and ocean freight. However, the startups that get most funding still find themselves more or in a disproportionate share in the camp of the Courier Express parcel business, which is driven by the e-commerce trend that also drives the higher market growth in CEP versus transportation, but also the belief of investors that in this space innovation might kind of have the fastest return on invest.
But don't you expect changes in the road freight area regarding startups and platforms?
Yeah, well, changes maybe not, but what we at least observe is, and I mean the number of 7 billion funding into road freight marketplaces and solutions is already huge. What we believe is that these companies, they scale and they seem to solve an actual issue and create efficiencies where they weren't, and therefore we believe in new funding rounds in this space. And we believe also in some sort of a winner will take most development, where some of these road freight platforms, people might know Convoy or Manbang in China, Coyote, might really scale, and others might go out of business, because right now it's still a crowded space of many startups.
And you have also looked at the digital transport platforms
Yeah, and that's basically trying to. It's a complex chart, but let me try to explain that a little. Because these 7 billion that went into road freight marketplaces or digital startups, and the 2 billion that went into air and ocean freight startups and platforms, all these 9 billion are not one and the same offering. So what we try to show here is that many of these known logos and startups concentrate first of all on one mode of transport. And so we see many in the trucking space, first column. Then others that focus on air freight or ocean freight, and only very few like Flexport actually having a multi-mode focus in the first place. So that already tells us one thing, that these platforms are successful only if they scale, and therefore many of them try to scale in one mode of transport rather than trying, like many logistics companies, to be a one-stop shop. Second insight, while the less complex offerings here at the bottom, only being basically the yellow pages now in a digital format, or providing rate comparison services, that's actually something where only few startups will have a future in, because that's kind of the value add is, and also the way how they own customer relationships is actually very little. But then if you go more up on this page, you increase the complexity of your offering. So then on the trucking space, we see the order matching platforms. And then one step further up, even kind of full brokerage and consolidation. So where the startups almost become digital forwarders. And that's kind of where we see more recently most of the money flowing, because it seems that these companies are really commanding loyal customer bases, owning customer relationships, and being able to monetize that over time, while kind of pure rate comparison might not kind of scale in terms of monetization. Those are a few observations, but I'm sure our audience might have questions around this. Happy to take.
All right. I got a question. I have a question myself, but I got a question, more questions from the audience. But one question is, logistics innovation subsidized by venture capital dollars has certainly catalyzed change. But for most of these last mile and digital brokers, new entrants, the profitability profile is very low, if anything.
Yeah.
Can any of these new entrants mature their business model to become profitable and create successful exit opportunities that to date have not materialized? So is there really hope for these parties?
Yeah, well, I mean, let's be honest that the venture capital, it doesn't look at profitability right away, but rather at growth and at kind of improving unit economics. And many of the startups that have received or successfully landed new funding rounds were at least able to scale and at the same time improve their unit economics. Now, are they profitable by now? No, many nowhere near. But given kind of the increased loyalty of customers appreciating the experience of doing business with them so much, it at least appears to the investors that there is a way to kind of monetize that more and more, and scale efficiencies kick in, so that at some point when they are scaled, the profitability kicks in. So therefore, I don't believe that every of them here on the page will ever be profitable, but I do believe that some will not only change customer expectations, but also become profitable and big. And that's the same what we had with Google in the search space 20 years ago, and many other former startups before. So even though I see and discuss with my logistics clients a lot the lack of unit economic profitability of these players, I can only say it's dangerous to underestimate the long breath that investors will have with some of these business models.
Yeah, I got a comment a year ago. A VP of one of the 3PL companies, Schenker, said, he said, I don't believe in this online freight modeling model because there's no volume. But he thinks there's no volume in this freight exchange area. But to me, if the snowball start rolling and they gain momentum, the volume will be there.
Yeah, firstly that, and secondly, I mean, we just a few weeks ago we have heard this press release that the Italian Post, for its entire truck line haul network, is handing that over and outsourcing it fully to Sender, this company here in the digital trucking forwarding, and expecting 6% reduction in line haul cost. And it seems that kind of once the swinging wheel is going, and on that platform there are enough truckers that want to get loads, and there's enough a load to be distributed via such platform, that it can work, and it can kind of optimize what a single truck carrier wouldn't have been able to for the Italian Post. Now, this is very fresh, and we haven't gotten any confirmation that it really improves the cost, but I mean, there's clearly signs pointing towards that.
Yeah, I see also like a Zaludu that's actually is a startup from DHL or a spin-off kind of startup. So you have a mixed bag in here. All right. Let's move over to Tobias. So Tobias, you within McKinsey did also a division of the funding across geographies.
Yeah, exactly. Ludwig, feel free to chip in whenever you deem relevant, right? But what we did here is we, as we outlined also in the beginning, we looked at the funding dynamics over time, and a couple of observations I think are clear from this chart. First of all, as Ludwig also outlined, when this whole funding trend started, a lot of it went to the US with almost 60%. But this share has gone down over the years, the US share of logistics venture capital funding to now, 34%. And a lot of it has gone actually to China, right? So we've seen a lot of increase of funding rounds and funding amounts for startups in China. And we see as well a significant share of the rest of Asia and India as kind of the next emerging markets. Why do we see a lot of funding, or what type of funding do we see in Asia and China? As Ludwig also said, not exclusively completely new innovation model, but we see a lot of funding in startups that resemble traditional business models. So startup that kind of take on a more traditional operating model in last mile delivery or contract logistics, just with a better tech backbone. And that is due to the fact that in those markets, there is often a lack of a strong incumbent 3PL or lack of presence and scale of global 3PLs in those markets. So venture capital and startups have discovered a way that there is a way to gain significance in this market, not by reinventing the wheel, but by doing something that others in other regions are already doing, just by doing it with a stronger tech-driven backbone. The other thing that we see here, and it is highlighted, that Europe remains a fraction of that market. It has actually increased slightly, but you see it with 5% of all the fundings. This is still, a really small share, and I think this is kind of surprising to many people.
So what is the reason for that?
So I mean, there are a couple of reasons, right? And I think we also compare it on the next slide to actually the overall venture capital funding. So across all industries, also Europe kind of is the smallest region with 13%, but still this is way more or way bigger and a way larger share than the 5% in logistics. So we see overall less venture capital funding in Europe, and that has a number of reasons, including certain kind of regulatory incentives and stronger risk appetite in other regions. I think that is kind of a factor that also explains the 13%, but more striking, the 5% is also to put into relation to what we see on the right chart here, to the GDP that Europe contributes with 25% to global GDP, and also to the logistics revenues that are kind of managed by companies that are headquartered in Europe with 46%. So there's a striking difference between the significance of logistics companies based in Europe and the venture capital funding in Europe. Now, one reason to explain this as well is that this is kind of the external lens on the market. So kind of the external venture capital funding, it excludes kind of investments and spending that companies do in-house and that they don't disclose as venture capital funding, because it is kind of going into their own innovation hubs, into their own startup incubators that they held in-house. And we saw a couple of examples there over the past years, right? So that is one reason, but it is still striking that that Europe is only 5% of the whole venture capital funding, despite the size of its logistics companies here.
Yeah, but don't you think, the US has the Silicon Valley, and there's a lot of attention to startups and with venture capitalists, whereas, and we'll discuss it later, but in Europe, I think that the venture capitalists don't know where to go to. There is no central environment with all the startups there. It's all fragmented across Europe, Berlin, Tel Aviv, Amsterdam, and you name it. So
I think
that's all part of the reason.
Yeah, I think that's a good point, right? I think overall the fragmentation in Europe still persists despite European Union and other harmonizations, but we still have different countries, different cultures, different customers, obviously, right? Different logistics customers and different languages. So I think the lack of a unified market in comparison, so Europe as a whole can compare to the US and Asia, but it is not a cohesive area as the US and China and Asia. So that is also a limiting factor to the ability to hyperscale across Europe. That is definitely more challenging here.
And some question related to what I see coming in is about this: is the venture capital investments, are they coming from the US or are they coming from the whole world? So is this also, where are these investments coming from?
Yeah, so I think it is global, right? I don't think we have done the pure cut like so this is basically startup funding going into logistics startup based in this region. It doesn't mean that the investor comes from this region.
No.
So the investors are typically globally. We haven't done a cut of who invests into European startups, but from the examples that we know, it is typically distributed globally. There's of course a stronger European base of investors also investing into European startups, as well as there is the same in China, obviously.
Yeah, there's also a question from the audience. The investment in China specifically, is it also a reason that there are not that many established 3PL companies and logistic companies over there, that there are more investments in these kind of startups?
So both. I think there's overall a greater appetite into venture capital and logistics funding. There is a stronger, let's still call it like market immaturity. So that is always attractive, obviously, to startups and venture capital. And yes, there is lack of kind of dominating power of incumbent logistics companies, right? So this in combination with strong growth, a huge market and huge fragmentation creates strong appetite and strong incentives to look into China in particular from a logistics point of view. And in a lot of areas, actually China is already leading kind of the benchmarks in terms of innovation that we see. If you look at the share of e-commerce and parcels per capita that is shipped in the major cities in Shanghai, and the share of instant same-day delivery that we see in the Chinese mega cities, this is way above what we see in Europe, right? So it has also proven that this market can be innovated quite quickly.
All right. So and what is the impact of COVID-19 in this whole market?
So yeah, I mean, we talked about it briefly before. So overall, we see a drop in funding. You see it here from by 50%, from roughly 5 billion in the first half of 2019 to now 2.3 billion. But this is kind of in line with an overall kind of greater uncertainty that dampens investment appetite. But what we looked at as well is how do these 2.3 billion funding in the first half shift across these segments that we identified, and what do we expect going forward? And I think here we see that there are also winners in the first half. So we see more funding going to what we call B2B e-commerce specialists, so kind of fulfillment related e-commerce logistics specialists. And as well as new entrants in parcel business. So the whole COVID crisis has led to an increase in e-commerce and relevance of e-commerce logistics overall. And that is why there are beneficiaries here from startups who have discovered this area, right? And the same goes for well, intelligence providers or more broadly, because what we see during COVID is an increasing need for transparency and for supply chain intelligence across the globe, and a greater speed in providing data to customers. And this is also where a lot of logistics startups have focused their business model on, or at least put part of their value proposition on, to provide superior intelligence, to provide greater transparency, and to just being faster and more transparent to customers. And I think both of these areas are segments where we expect increasing interest and increasing relevance going forward, now caused by the COVID crisis. So both the e-commerce logistics area as well as the more broadly intelligence and transparency provision.
Also, a question from the audience: do you expect that there will be a shift in investments regions due to this COVID-19?
Sorry, shift in investments
per region.
Per region. That is a good question. I think overall, overall we saw the small share of Europe still, right? So I would expect Europe to also go up. I expect investors to have a greater trust in the ability of startups to scale across the continent, and despite the strong presence of traditional logistics companies. At the same time, Asia is still so huge. It is still kind of growing a lot faster, and there is still a higher fragmentation. So I think overall, the Asian share will most likely rise going forward.
Another question is there an increase in robotics startup funding post COVID-19?
We haven't actually looked into robotics in particular. I mean, I will take this away and have a look myself.
And Toby, if I may jump in, so where we see robotics investment scale up is in warehouse automation and partly also in terms of kind of drones and delivery robots, but mostly in the warehouse automation, because when commerce shifts from offline to online, warehouses become fulfillment centers. Out of a few hundred pallets stored, we will move into millions of single items and parcels, and that just creates so much kind of manual handling if you don't automate and use robotics. And that's why Amazon was the first to invest into Kiba robotics, and we see much more in that space.
Yeah. All right. Let's move on to our side from Supply Chain Media. So we as a Supply Chain Media, we have also done some research in the last 3 years. So we started to analyze the whole market of European supply chain startups. So 3 years ago, I was wondering, there is no center of excellence or knowledge about European supply chain startups. So that's what Supply Chain Media have done. So we have analyzed over 200 supply chain startups in the last 3 years. So I will talk about this later on, and Ludwig can, if you want to start up with Tobias, if you want to comment on this, feel free. So here, this is our overview of last year. So basically what we have done in a similar way what you have done. So we created 10 categories to position the startups from left to right, on the supplier side all the way to the last mile side. So that's what we did in the last year. We had 10 categories, and basically we made a division between startups, rather small companies, 5 to 10 people, not so well funded yet. So maybe they have up to 2 million raised capital, and sometimes even less. And you have the scale-ups, and they are more well-funded. They have more employees, and maybe they are already a bit older. And we decided to say, okay, what is the unit of measure what they're handling? So is it the container? Is it a pallet, or is it a parcel? So basically, this whole overview is not so much targeted for the venture capitalists, but more for the end users, the 3PL companies, the retailers, the manufacturing companies, to see, okay, what do we need in what area, and what are the startups playing? And you will see some areas like the ocean freight forwarding on the left, the second bar or column on the left. It's quite crowded, and there are also big players like Freight Hub and Container and Shippermax. And on the road freight matching is the third one on the right. You see a lot of players, Everroad, OnTruck, similar names you have seen before. So there's a lot of traction over there, crowded. Tobias, what do you think? Will there be a consolidation over there, Ludwig? What area do you think there will be the consolidation? So you see a lot of crowded columns.
Yeah, so where we have seen first steps in consolidation was kind of the more the road freight and tendering space. I think you have it here in the green palette thing.
Yeah.
So I think Everroad has just been acquired by Sender, if I'm not mistaken. So these things will happen, and I think that is also the market where the winner takes most principle. I would expect is most pronounced.
Yeah, and I think there is another dynamic to it. I think you will also see, and I think we have also seen shifts between these areas, right? So startups starting in a digital forwarding business model and switching into a more like software type of service offerings, such as, for example, Containers has done, or others expanding into it. So I think this is kind of also kind of an area where you will see a little bit of kind of horizontal movement.
Yes. And when I ask these startups, in what area are you playing? They most likely want to play in a lot of areas, but I said, what is your starting point? And to some extent, they are moving out or moving over to other segments, I would say. So what we did last year, we had the 3D printed spare parts in it, but we decided, that is a separate area. And now we have split the supply chain visibility. You see it's in the middle. We split them because supply chain visibility on one hand and blockchain and IoT on the other hand, they are getting divided. And one thing is quite interesting, blockchain is on the move. So last year, Nexiot and mbrosius together, they raised 100 million euros. So people saying blockchain is dead. Well, the venture capitalist VC companies are thinking differently. So they have high hopes for those players in the blockchain and the supply chain. And supply chain visibility is, this different area where you connect all kind of data, all in the cloud, and you can connect to all kind of systems from different companies. So that's what we're seeing right now, that the supply chain visibility area is moving up. What we did also compared to last year, we did a comparison between those two analysis. We have the 10 areas again, and as you already saw, your road freight matching, in our opinion, in Europe is the biggest area where there was most of the funding. Last mile delivery is also the area, but all in all, what you saw from January last year to January this year, we came up to 264 million raised capital last year in all those mentioned startups, maximum of 5 years old, to 540. So it's almost doubling. So it's kind of a huge, whopping growth in funding. So is it also what you have seen, Tobias?
Yeah, but then we can even say that Europe decouples a little bit from the global trend of reduced venture funding. And I, at least kind of from my observations and judgment, that feels right, because we have seen European startups like the ones listed on your previous pages quite successful. They might have taken a bit longer, and Europe as a market is a bit more difficult through all the language barriers and regulatory barriers. But once they kind of are successful, they seem to scale and keep the momentum. Therefore, very much in line with our views.
Yeah. Taking a closer look to some segments, what is quite interesting, and take an example is CargoNext, a German startup, and now a scale-up. They have a nice funding, but they were also part of our European supply chain contest last year, and I take a slide from them, that's their view. But the interesting point is that they are in the same column, so they mention other competitors like Everroad, Freightlink, Chronotrunk, Zaludu, Sender, Instafreight, and we asked them, how do you differentiate? So what they said is, okay, we apply more and more machine learning, just not only to do the freight matching, but also to look ahead, to predict where we expect the need of road transportation within a few months, and we reserve capacity and make sure that we have it. So even in those categories, we see a lot of improvements to go to the next level. And an interesting thing is that Henkel is using CargoNext, and they were so positive about what they did that they said to all their suppliers, please use this network of CargoNext. And then we will see that if some bigger company like a CPG company like Henkel is saying to their suppliers, please use this platform, then you will get a huge snowball effect. Another thing is what I said about blockchain. Now, and blockchain is not by cryptocurrency and that kind of stuff. It's a distributed ledger, and make sure that all your data is secure across the chain. And mbrosius is also one of the players, and they had a pitch last year at our European supply chain contest. It's okay, they have already applied blockchain to connect it within an SAP environment and legacy software. So now blockchain becomes viable and practical, and there's use for it. In this case, highly expensive whiskey, you will see where is it and who's owning it, so you don't have a problem that some highly expensive bottles of 15,000 euros are missing. So that's what you see right here. I see a lot of questions coming in. What we did also in the last 2 years, we asked all those startups how they're faring, commercially. So we asked them 10 questions, and simple, is it positive, is it negative, or is it neutral? And we asked, and basically what you can see right here is they are very optimistic. And we don't go through the whole slide, but we ask, how unique are you? And basically all that they're saying, we are very unique. And that's also scary, because they think they are unique, but we are doing the analysis of all those 200 supply chain startups. We come across similar startups, so they are not that unique, and that's what we see. So if you are pitching and a company will say, we have seen a similar pitch yesterday, then you haven't done your homework. So I don't know what you think, Ludwig and Tobias. Are they all unique?
Martijn, I think the honest answer is, if you are a passionate entrepreneur and startup founder, you will never admit that you're not unique, right? So I think in a way, the uniqueness is then probably not around the product offered or the pain point solved, but more around how the customer experience, or the ease of use, or some other things. So it's very hard to say kind of I serve a unique need, and it's only me across the world that can solve that need. So yeah, that's my perspective on the uniqueness. Even our incumbent providers, right, are not always unique.
Yeah. Tobias?
Yeah, I was just going to add that the market is huge, right? So I think there is a logic in you know, there being some overlaps within the market and between these players. But I think yeah, as Ludwig said, that the way of serving customer is probably what a lot of these players see their unique strengths, and the way that the tech backbone kind of links up with this.
Yes, but I'm also saying to them, you know, electricity and the telephone have been invented at the same time in several places around the world. So be aware what's happening around the world, so that you have came across a similar pitch or a similar idea somewhere else, and you know, be aware what's already there. So like in on-demand warehousing, you see these ideas popping up in France, Germany, the Netherlands at the same time. So in that sense, they are not that unique.
No, you're right. And what we see is in startup funding, and that's maybe the bottom line, there hasn't been a really disruptive model that is in our kind of entire pages here covered today. But what we do see is that these startups force a step change in terms of customer experience and data-driven decision making, and also speed, visibility, that forces the incumbents to react faster, because and hence the startups are a catalyst for a development that pushes the incumbents a bit out of their comfort zone, but not makes their product redundant.
So we did a similar survey 2 quarters later, and what you see now, basically they had less problems attracting funding and investors, but you already saw that it had some problems signing contracts. So they're beginning with pilots, and then you have to have paid contracts. And then we did the similar survey in Q2 in May, and then you know, you see it all getting red. You know, you see the commercial leads in the pipeline is getting a problem. Potential customers to do a pilot is getting a problem. Prospects to sign a contract, it's a real problem. So what we see overall, and if you go back from here to there, you see it's getting quite red in the startup field in Europe. So what's your response to that, you know, Tobias and Ludwig?
So my sense is, realism kicks in, and I think part of that is really through COVID. Part of that is that when you did the survey first time, the startup was an even more immature state, and the more mature the companies get, the more they realize the problems out there. I think one takeaway I could draw from that is all the areas that are super red here are areas where incumbent companies do actually have much less of a problem. However, in terms of uniqueness of solution and visibility, and also kind of attracting new employees and stuff, might be something where incumbents have more of a challenge. So it almost speaks to more cooperations and partnerships between incumbents and these startups, so that each of them can solve the problem of the other.
Yeah, but still there are some successes, like the Austrian startup Bird just got a funding of 5 million in July 2020 after the COVID-19 pandemic peak of the crisis, I would say. So there are still some successes in this area.
Sure, and we have seen that logistics is also quite a resilient sector, and right now most of road, air, and ocean freight is kind of at least earning a lot of money despite the crisis.
Yes. So we get into the final part.
It's an opportunity to invest as well, right? So that there are also opportunities opening up.
Yeah, right. Yeah, there are a lot of opportunities, and there is a lot of needs in end-to-end supply chain visibility, and also last mile capability is paramount for a lot of companies, because e-commerce is growing very rapidly. You see a lot of retailers, but also direct-to-consumers manufacturers are looking at last mile delivery options, how to make sure that our website is capable for last mile delivery, and especially in a sustainable way. So finally, we had one slide about the implications, and we have some time for some questions. So what are the implications for the different parties? Tobias, do you want to kick off, or Ludwig?
Yeah, I mean, we framed it a little bit of around what are the key questions on the implications per segment, right? So I think let's maybe even start from the bottom if you want. I'm sure, Martijn, you can talk a little bit about the first area as well. So I think for investors, as we also just discussed, there are a lot of similar business models out there, a lot of similar startups. But what is really the next step that hasn't been cracked yet in the value chain of logistics? It started with last mile, it went into brokerage, now into supply chain visibility. But where could be the new future next steps that inefficiencies could be tackled by startups? And then also, like what we discussed, what are the overarching partnership opportunities in a market that is so intertwined, and also opportunities between the startups investors invest into, VC investments to, and the traditional companies that are still active in.
So what I also saw when I analyzed these supply chain startups, and most of them directly asking the founders some comments and some questions. So a lot of them, they are still in need of investment. So to me, it's not quite clear that well, a lot of these startups mentioned in my matrix and also in your overview are still searching for investments. So I think do look around also as investor, because and do an assessment of all these, but there's still a high need of investing in these startups, especially in Europe, I think.
Yeah, exactly.
So what are the implications for the startups themselves, Tobias and Ludwig?
Yeah, I think as we discussed earlier, right, it is the question of how can you expand quickly, at the same time do the basics that you're probably being contracted for by your customers, which is operational excellence. And we know that reliability is kind of the core requirement that you need to fulfill. Typically ranks higher than prices and price sensitivity, right? Because that's really the critical piece. On the sales process, typically is where the startups accelerate. So how can you leverage that to attract new customers and expand your scale quickly and ensure the operations? And then the second point is, how can you keep profitability, at least on a unit basis, in sight while scaling quickly? I think this will be ever more important as we go forward and we see more startups maturing, investors getting also a sense of what the ultimate target state could be, and at the same time staying flexible and adjusting also as a startup to your business model and operating model to new market needs. As we discussed it before, the ability to switch from a entered path into a new venture within the same startup as some did, right, is a key requirement, I think, as the market develops and new kind of market niches and market needs become present.
Yeah, one thing what I experienced, I asked all these 200 supply chain startup what is their solution, and I think they are not quite clear what supply chain and logistic problem they are solving. They are keeping sometimes their solution quite vague. So be very precise. What is the actual problem your users are facing and you are going to solve? So that's something I should express more and more. Be precise. The problem you're solving with your solution.
Correct.
And what are the implications for the 3PL companies, the logistic service providers?
Maybe you, Ludwig, wanna have a...
Well, yeah, one thing I already touched upon, which is given these guys are fast, they create a customer experience and ease of use that incumbents might not have done yet, and they kind of are also rapidly developing a new stuff. They are actually, bringing in capabilities, not only products and solutions, but also capabilities to the party that some incumbents are in desperate need of. Therefore, around kind of partnerships and minority investments, I see a lot of opportunity for incumbents to also basically help themselves. There is also the way of using some startups to extend or venture into adjacencies. So if I'm a carrier on kind of airport to airport, can I extend my value proposition by with a e-commerce fulfillment startup that helps kind of import and bring these parcels to the last mile, and maybe only as a kind of stitching together services of multiple stakeholders. So I think there are many areas where 3PLs and incumbents can use them as part of their own innovation strategy.
Yeah. What I saw is that you see different approaches among the 3PL companies. Like, you know, DSV is collaborating with a startup called Dropboy. DHL has launched their own startup, Zaludu, and Jeffco has acquired Chrono Truck. So there are different approaches depending on what you want and what you need. And what I did last year, one of the bigger 3PL companies, I did a workshop with them, with all the country managers, and I said, assign startup scouts in each country. So let high potentials within your company scout for startups in your own country to see what's happening at the universities in your area, in Bucharest, in Stockholm, and wherever you are. So create your own startup scouts to make sure that you are not missing out some developments that might be of value to collaborate with, to acquire, or to copy even, that thing.
And one tactical thing could also be exchanging talent, right? Having secondments from incumbents to startups and vice versa also helps both sides.
Yeah, and finally, the manufacturing, wholesale, and retail companies also have to look at these startups, and they are in need of innovation, so they are looking at startups like Henkel has done, and Unilever, and some others. But basic thing is, what are your white spots in your systems area, in your portfolio? So what are your white spots, and see if there are any startups who can fill up this white spot in a certain area. So that's what my advice would be to supply chain managers and directors at the shipper side. But another issue, and I think you could mention also something about that, how do you make sure that you are able to deploy this kind of startups, because they are not apt to roll out and implement like the established software companies? So how do you know and help them out to roll out the solution across the company? Is it also what you see within 3PL companies and established companies as a challenge?
Yeah, I mean, normally startups should be good at creating an easy onboarding to their solution or software. But nevertheless, I mean, kind of working with incumbents in their legacy IT infrastructure can be a challenge, and it's kind of probably not what these startups have thought about kind of making easy. But I would not fully agree with that. I think if you dare and there's a will, there's a solution for that.
Okay, so we actually almost at the end of the webinar. There are some few questions we could address, and otherwise we should take them apart separately. One question to you, which incumbents are at risk or feel at risk from the startups, and are there specific key segments?
Yeah, I mean, risk is depends a little bit, right? We already said it will not be the full-blown disruption, but I think it will be mostly segments with a lower complexity and a service proposition that is easier to digitize, right? So I think, or put it differently, the traditional companies with ability to manage high complexity and provide value-added services will be of less risk. Let's just maybe frame it like this.
And what I also see is that companies want ease of use. So where some processes in the logistics and the freight forwarding are too complex, and there's a startup or some startups popping up, make it way more easier to book a transport of a container or whatever, then that areas traditionally are at risk, because if there is an easier way to do business, that will be probably a success, and that's also an area where incumbents will be at risk.
Yeah.
Another question now regarding supply chain sustainability. Is that a new area, or what do you think about that?
Well, I mean, sustainability is a big trend, and the shipper side is requiring that more and more. So more and more RFQs for transport solutions include requirements on emission reduction and at least transparency around emission and maybe compensation of emissions and waste reduction. So definitely we see more of that. We see little startups kind of trying to solve it all because it requires quite some investment. Think about sustainable fuels or electric vehicles. But when we talk robotics, when we talk kind of new vehicle technologies, when we talk the transparency on emissions that can be reduced easily, that's where I expect startups to play a larger role. But I think given the investments required and the necessity and urge, it's also a carrier specific problem that carriers cannot wait for startups to solve for them.
No. What I also saw in Europe, you have a few supply chain startups with a focus on sustainability. One of them is Circular IQ. They have developed a product passport, and in this passport you can see which company has contributed to an end product. So with office chairs, you can see the whole bill of material, where are all the elements and all parts coming from, and in the end, for reuse of components, this product passport will be very instinct and useful to have. So there's a lot of development in that area. And another startup, Sustainable from Germany, they have found a way to make your suppliers upstream more transparent. So what is your tier 2 supplier and tier 3 and so forth and one. So making sure that your whole supply chain upstream, where it's all coming from. So in that area, you see new initiatives and new startups popping up. Another question, what would be the percentage of shippers and LSP working with startups? And how does this percentage compare to other industries?
Well, I think on the shipper side, it's easier to find out because that's about kind of a market share. But beyond market share, we see more and more shippers, especially from innovative verticals like e-commerce that want to test it out and try it out to be able to compare the customer experience of using digital startups versus incumbents. So there, my gut would say very high share, probably 1 out of 2 at least. In terms of the incumbent logistics players, many do not do. So some use trucking platforms and brokers to source capacity, but there's still, a question around, I want to go multi-channel, but do I need to leverage these digital channels, or do they become a threat and cannibalize my own business? And that puts it a bit towards the more cautious approach. And in other industries, I would say it's similar, but given that startups and venture funding was earlier in many other industries, we have seen some further along cooperation.
Thanks. You know, we're getting to the end actually, and we're already out of time. So on this slide, I have put the link to the report by McKinsey we have discussed, and also the link to our maturity matrix, and you will find a lot of more interesting information in both our websites. So I would like to thank Ludwig and Tobias for their expertise. Maybe from both of you, some final advice to the audience regarding logistics startups. Ludwig, a final word?
Yeah, one final word is you cannot really judge it or get the most out of it unless you test it. So test it both as an investor, but also as a incumbent to learn from these startups. And we'll also, together with you also, Martijn, try to keep you as an industry up to date, regularly updating our perspectives on that at least once, twice a year.
Yeah. Tobias, final word from your side?
Yeah, similarly, like my advice would be to stay informed. So beyond hype and beyond ignorance, try to really understand what is in there. I think there has been a lot of misbelief wrongly, and there has been a lot of overhype in the beginning. But in the middle, there's still a lot to learn and to gain for all parties. So there is a need to stay on top of this trend.
Yes, and my final word, you know, judging the startups is the best way to listen to them and to be inspired and surprised by their solution. So you know, there's a lot of innovative thinking within the startups. So reach out to them and listen to them and be open to them, and hopefully you can find some innovation that's fitting your needs. So thank you. By that, I want to thank you both, Tobias and Ludwig, and I would like to thank the audience again for keep on listening. And this has been recorded, and you will get the slides as PDF in 48 hours. So Tobias, Ludwig, thank you for joining me in this webinar.
You're welcome.
Thank you, Martijn.
Pleasure.
Thanks, everyone.
Thank you, and I hopefully see you again. We have some more interesting webinars coming up in the next weeks. So all your listeners, I hope to see you back soon. Okay, thank you. Bye-bye.
Thank you.
Thank you.